Welcome to Dr. Fred Markets. This is not financial advice. While most people ignore what's happening in the markets, a few choose to pay attention. And that difference, that simple choice to stay informed, changes everything. You're one of them. Let's get into it.
Your AI stocks are already in a bubble, and you're still early. Verdict: US markets are quietly turning into one big AI tracking ETF. And if you don't understand that, you're the exit liquidity. Signal 1. Look at Nvidia today. Up over 4%, trading at $234.90, dragging the whole S&P higher like a tow truck pulling a junkyard. The index is green, plus 0.94%, not because the economy is strong, but because one AI arms dealer is sucking up every marginal dollar. Nvidia sneezes, your diversified portfolio catches pneumonia. This is the first tell. The S&P isn't a broad market barometer anymore. It's an AI sentiment meter with a bunch of side quests. Signal 2. Media and money are already rearranging their furniture around AI. Warner Bros. Discovery sales chiefs are literally cracking jokes about the Ellison in the room, winking at an AI content-obsessed Paramount deal. Translation: the ad world knows eyeballs chase AI narratives, AI shows, AI news, and ad dollars chase eyeballs. Where ad dollars go, earnings forecasts follow. Where earnings forecasts go, index flows blindly follow. Your index fund is not the market. It's a machine wired to chase whatever narrative Wall Street can sell to pension funds. Signal 3. Every politician with a pulse is suddenly pretending to be a tech statesman. Trump is signaling deal-making at a China summit. Nobody in those rooms cares about your job. They care about semiconductor supply chains, AI export controls, and who owns the GPUs. Tech sovereignty is the new oil. When world leaders talk national security now, read chips, fabs, and AI stacks. That's not politics. That's your portfolio being negotiated in a hotel ballroom. Here's the cliff. You don't own an AI portfolio. Your boring US stock exposure already is one. You just haven't noticed the wiring diagram. Now the connection. These three signals form the same picture. AI is no longer a sector. It's the chassis the US market is bolting itself onto. Nvidia's weight in the S&P means AI hardware sentiment sets the mood music for your retirement account. The WBD Paramount dance shows content, ads, and media now price in an AI-defined attention economy. The diplomatic theater around China, chips, and deals is really a negotiation over who controls the physical and intellectual infrastructure of the next 20 years of US corporate earnings. That's the one thing nobody tells you. The US stock market has quietly pivoted from own the economy to rent the AI stack. Mechanism time. Index rules are dumb but powerful. Capital flows by formula. When Nvidia rips, its market cap jumps. Passive funds must buy more to match the index weight. That forced buying lifts it further, which drags the index, which makes retail think, S&P is safe, economy is good, I'll add more. That new money then auto-buys more Nvidia and its AI cousins. Congrats, you just discovered the AI flywheel hiding inside your low-fee diversified ETF.
Does what you just heard shift something for you? That feeling, that need to know more, is exactly the right reaction. Most people never get there. You just did. Let's keep going.
Meanwhile, corporate America sees this and front-runs it. CEOs jam AI into every earnings call, not because they have a product, but because they want their stock priced as an AI option. Media companies chase AI partnerships so they can sell higher multiple tech stories instead of low multiple content stories. Politicians posture about AI and chips so they can justify subsidies that fatten corporate margins and stock buybacks. All those narratives converge in one place: US equity prices. Your 401k is now a hostage to the AI hype cycle, whether you love it or hate it. So what does this mean for you? First, stop pretending you don't take an AI bet. If you own a US index fund, you already do. The only question is whether you understand the bet size. Second, here's the one concrete thing you didn't know. Your broad US stock fund has an embedded factor exposure: AI intensity. Count how many of its top 10 holdings are AI core, chips, hyperscalers, AI platforms, versus AI tourists, banks, utilities. That ratio is your hidden AI leverage. Third, your action item. No drama, just math. 1. Pull up your main US stock ETF. 2. Look at top 10 holdings and their weights. Add up the weights of companies whose earnings narrative is dominated by AI or chips. 3. If that chunk is more exposure than you're actually comfortable losing in an AI downturn, you don't trim tech. You add non-US or non-AI sectors on purpose, instead of blindly stuffing more into the same AI loop. You're not escaping AI in markets. That fantasy is dead. Your edge now is clarity. Know exactly how much of your net worth is chained to the AI locomotive, and then decide whether you're in first class or clinging to the outside. This is not financial advice, but here is the truth. US stocks are now an AI machine with a flag wrapped around it, and your job is to decide whether you're operating the machine or standing in front of it. 3-point summary. 1. Nvidia and a handful of AI names now steer the S&P's daily mood. 2. Media, ads, and politics are all repositioning around AI, feeding that same market narrative loop. 3. Your safe US index fund is an unlabeled AI bet. Measure it, then size it on purpose. If you learned something, do the adult thing. Subscribe, come back tomorrow, and stop letting your portfolio be the last one to figure out what game it's actually playing. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's a wrap for today on Dr. Fred Markets. I hope this gave you something to think about, a new angle, a clearer picture, a better question to ask. Remember, this is not financial advice. Do your own research, always. If this video added value to your day, subscribe. It's free, it takes 2 seconds, and it's the best way to support this work and keep it free for everyone. You'll also find every video as a full article on the blog, drfredmarkets.com, and the newsletter is in the bio. I'm Dr. Fred Markets. See you in the next one.